Welcome to this explainer. Today, we're going to distill Itaú Unibanco's absolutely staggering first quarter 2026 earnings, their current valuation, and those upcoming dividends into a really clear, actionable investment case. Look, if you've been tracking Latin American financials at all, you already know that Itaú is a massive, dominant force. But what they've actually managed to achieve in this most recent quarter, it's truly something we need to unpack. We're going to look right past the headlines today and dig straight into the data to see what's actually driving this machine. So here's our quick roadmap for today. First, the blockbuster results. Second, under the hood, credit quality. Third, tech, AI, and efficiency. Fourth, valuation, what analysts say. And finally, number 5, dividends and shareholder returns. All right, let's jump right into section 1, the blockbuster results, looking at their massive profit and scale. Now, the absolute headline grabber here is a massive 12.3 billion reais in recurring managerial profit. To put that into perspective, that is driving an incredible annualized return on average equity, or ROE, of 24.8%. To see a legacy traditional bank operating at nearly a 25% ROE at this kind of scale is, well, it's phenomenal. It's literally like watching a giant cruise ship maneuver like a speedboat. It shows us they aren't just growing, they're growing with intense, hyper-focused profitability. And you know what's really fascinating here is the mindset behind those numbers. CEO Milton Maluhi Filo attributes this win to disciplined, consistent execution rather than just getting lucky with the macroeconomic environment. He actually talks about this as an infinite game, this continuous effort to build a sustainable portfolio that generates value with much lower volatility than the broader market. It's a very clear signal that management absolutely isn't resting on its laurels. And you can really see that execution play out in the actual loan book. Think about this. A 1.5 trillion real credit portfolio, which grew 9% year over year. You're seeing massive, highly targeted growth in very profitable specific areas. Mortgage loans are up over 11%, credit cards are up over 8%, but look at that last point, a staggering 63% jump in private payroll loans. No way around it, they are aggressively targeting specific client segments where they know for sure they can secure strong margins with manageable risk. Moving right along to section 2, let's look under the hood at their credit quality. Just as a quick refresher for anyone new to banking metrics, an NPL, or non-performing loan ratio, just tracks the loans that are over 90 days past due. So essentially, this shows us the bank's bad debt. It's the ultimate reality check for all that aggressive portfolio growth we literally just talked about. So here's the crucial point. Itaú's NPL ratio is sitting incredibly stable at just 1.9%. In a macro environment that's completely filled with shifting interest rates and volatility, maintaining a 1.9% default rate is a massive win. It proves their risk models, which they've been fine-tuning for years to avoid the tough cycles they faced in the past, are holding up beautifully. And this stability, it definitely isn't an accident. Management is playing a hyper-proactive game here. As the CEO noted, they build provisions based on forward-looking expectations rather than waiting for defaults to actually hit the balance sheet. They're actively monitoring stage migration in their loans and taking a hit to provisions early if they even see storm clouds on the horizon. This conservative, proactive approach completely protects that robust balance sheet. Okay, on to section 3, tech, AI, and efficiency. Itaú is absolutely not just some old-school traditional bank relying on brick-and-mortar branches anymore. They are heavily pivoting into the digital space. We're talking integrating Pix directly into WhatsApp for totally seamless customer journeys, massive cloud expansion, and deploying AI directly into their acquiring business to basically revolutionize the payment experience. And hey, the industry is definitely noticing. Euromoney even awarded their private bank Best for Digital Solutions for 2026. And here is the operational payoff of all that tech investment, an efficiency ratio of 34.9% in Brazil. This actually marks the best historical level they've ever seen for a first quarter. Make no mistake, when you automate, when you move to the cloud and you optimize your physical footprint, your cost to generate revenue just plummets. That 34.9% is a direct testament to their digital transformation dropping straight to the bottom line. Which brings us to section 4. Valuation. What are the analysts actually saying? Looking at some recent due diligence from XP Equity Research, the historical price-to-earnings data is incredibly revealing. The bank is currently trading at around 7 times 2025 earnings. When we check the historical bands, this presents a really compelling entry multiple. You are effectively paying a below-average historical premium for a bank that is operating at its absolute peak historical efficiency. Backing up that valuation, XP's financial models are projecting steady, highly reliable growth. They see net interest income climbing from $125.9 billion in 2025 to almost $135 billion in 2026. Because of this, XP has set a target price of 45 reais per share, which implies a very healthy 17% upside from current trading levels. Finally, let's wrap things up with Section 5, dividends and shareholder returns. To really grasp their dividend capacity, you first have to understand their benchmark. ITUB targets a cost of equity of around 15%. Now, because they're generating an ROE of almost 25%, they are comfortably, and I mean comfortably, clearing that 15% hurdle. They're generating real, tangible value way above their baseline capital costs. And that creates massive excess capital that's ready to be returned straight to investors. And return it they do. You might want to mark your calendars for this, because ITO has a highly reliable monthly drumbeat of interest on capital payments scheduled all throughout the first half of 2026. Every single month, you're seeing a steady 0.0150 reais net per share hitting accounts. And that's supplemented by much larger, extraordinary dividend payouts periodically throughout the year, all fueled by that massive capital generation.
According to XP's estimates, this dividend story is honestly only getting stronger. Because of the bank's organic capital generation and their rock-solid baseline Tier 1 capital, XP forecasts the total dividend yield growing from an already impressive 7.5% in 2025 up to a highly lucrative 9.5% estimated by 2028. You're basically getting paid handsomely just to hold a highly efficient, dominant market leader.
So I'm going to leave you with this final thought to consider for your own research. We've seen the 24.8% ROE, we've seen the flawless credit metrics, and the huge digital advancements. But as global rates continue to shift, and as AI becomes a normalized commodity across the entire financial sector, can ITO actually maintain this staggering 25% profitability over the next decade, or will nimble fintech disruptors eventually close the efficiency gap? It's the ultimate question for long-term holders. Thanks so much for joining me on this explainer, and keep learning.